when it comes to the stock market, not many people think about the ASEAN region. So Vietnam, Indonesia, and so on. Many people think of the traditional markets, the UK, the US. And of course, when it comes to emerging markets, plenty of people think of India and China, but very few people think of some of those frontier markets, which is where Sam from Nigeria is going to come in and talk about some of the opportunities that exist in the likes of Vietnam, maybe the Philippines, or some of the other stock markets in the region.
Thank you, Adam. Hello, everybody. Thank you very much for taking time to listen to this short presentation. My name's Sam Cotham. I'm the Managing Director of Nanjia Capital. We established Nanjia Capital back in 2013. We are a Hong Kong-based independent private asset management company. We hold the full Hong Kong SFC, that's the Securities and Futures Commission, regulated licenses in Hong Kong and various trading licenses in Dublin, Ireland. The business, we call ourselves an independent asset management. We're a small business. We have about 205 million of assets under management. We're a team of 7 dedicated professionals. All of us have had long-term experience and have worked in the Asia Pacific region for between 10 and 30 years. One of the key differentiating factors about Nanjia when we built the business is we build our own platforms rather than using what we see as cumbersome third-party platforms. So we own all of our own infrastructure. What that entails is we own an ICAV UCITS business, which is domiciled in Ireland. This enables us to select carefully or meticulously the service providers we use for this business to ensure trading is as most efficient as possible and also safeguarding clients' assets. So within this capacity, we use HSBC and Societe Generale as our depositories. We use Morgan Stanley as one of our brokers. We use Grant Thornton, who process all of our audits. So these are real key names in the industry. So we can ensure that the assets are being looked after in a safe and diligent manner. So one of the funds which we would like to talk about today is the Civetta fund. Now, we're also joined with the lead portfolio manager, Alex Klein-Tank, of the Civetta strategy, and I'll introduce Alex in a second. Civetta focuses on the ASEAN region, which is obviously a very exciting and dynamic area of the marketplace to invest in, and Alex will talk a little bit more on the macro and why clients should have part of their portfolio in that region. Alex has almost a 10-year track record, a 10-year audited track record, and we launched the UCITS fund back in March 2020. Since launch, we've returned around 160% return versus the index of 47%. So we've more than tripled the index, which is kind of expected on the type of strategy and our approach to investment, which you would expect. So with that, I'd just like to pass you over to Alex, who will just go through a little bit more about his background himself and also talk about the ASEAN region. Thank you, Alex.
Yes, thank you, Sam. Hi, Adam, and nice to meet everyone else here. Yeah, let me start with Civetta. So I set up Civetta Capital 10 years ago. James Moss is my colleague. We are part of 2 guys in the investment team. I'm the portfolio manager. He's the head of research. So what we do and what I've done before. So before I set up Civetta, I was working for a European fund manager and also focused on Southeast Asian equities. Before that, I was working for Deutsche Bank here in the region as a broker, catering basically to value investors who came after the Asia crisis. So James and I have over 40 years experience on the ground here in Southeast Asia. And our focus is on small mid-cap stocks in this region. This is where we find sort of the best opportunities, mispriced, undervalued, overlooked opportunities. So this is for us sort of the market cap range of 100 million to $1 billion market cap. These are typically sort of overlooked by institutional investors because it's too small. It's too small for brokerage coverage. So what we do is really sort of meeting these companies has been a bit difficult because of sort of the COVID situation in recent years. But before that, we would travel to Vietnam, Indonesia, Philippines, Singapore, I'm based in Thailand. Both James and I are based in Thailand. And within that, so we run a long-only portfolio, about 30 stocks, really sort of bottom-up, value-driven. But within that portfolio, we have sort of identified 4 structural growth themes for the region, long-term. A few are quite obvious. You know, we see an urbanization a trend. Sort of Southeast Asia still very much sort of rural. You know, lower than 40% urbanization compared to 80% in the north of Asia. Favorable demographics. You know, very young population. 60% of the 700 million people are under the age of 35, and in places like Vietnam and Philippines, it's even younger populations. So you get sort of the demographic dividend there. So these are sort of powerful drivers. You know, if you compare sort of Europe or Japan, you know, sort of aging populations, whereas sort of in ASEAN, sort of the next sort of 5-10 years, that's sort of, you know, pushing these markets and pushing the sort of the GDP growth levels, sort of back to levels, you know, well over 5%. In places like Indonesia, 6-7, Vietnam, also sort of those levels in the coming years. So we have a fast-growing region. Stocks, as we have done quite well, but the last decade has basically been sort of a lost decade for ASEAN. MSCI ASEAN has basically barely moved. You know, some of these markets are still sort of below sort of where they were in the 90s. So investors really have sort of ignored. Foreign institutional investors have been net selling for recent years, even in a place like Vietnam, which is, you know, probably one of the hotter markets in the region. Foreigners are still net selling. So we see sort of retail participation, sort of development of sort of the asset management industry, which again sort of will support sort of the markets here in the region. A few other themes in our portfolio, just to touch base quickly on infrastructure spending. If you have been in this part of the world, so places like Jakarta or Manila, or in Vietnam or in Thailand, you know, it's in dire needs of sort of investment in infrastructure, the roads, railways, airports. So we have exposure to companies who cover that sector. A smaller sector of smaller focus we look on sort of is the electric vehicle market. So in Vietnam, it's a big thing. One of the biggest Vietnamese IPOs will come later this year to the Nasdaq. It's called VinFast. It's part of the Vin Group, one of the largest conglomerates there, and they're going to build cars, electric vehicle cars, in Vietnam, but also in the US actually. And also Thailand is pretty much focused on sort of developing the electric vehicle revolution, you know, being already sort of a quite large automotive hub. We play that through sort of some commodity plays, so nickel, copper plays in the region, but also some service industries to the mining sector. And one of the biggest drivers is really sort of a shift from China manufacturing to ASEAN. We see sort of similarities compared to, you know, the 80s, late 80s, early 90s, when sort of Japan manufacturing moved to Southeast Asia. And that was really the boom years for places like Thailand, Malaysia. And this period, it's really a shift from China to places like Vietnam. You know, China is no longer that competitive in the region. Labor costs are higher than in Thailand, much higher than in Vietnam. Energy costs are higher. The tax incentives in Southeast Asia are more attractive. So you see a lot of companies moving, or at least sort of also setting up production base, manufacturing base in the Southeast Asian region. Just sort of put things a little bit in sort of perspective. So ASEAN, as I said, 700 million people. There's about 5,000 stocks listed in these markets. The total market cap is less, you know, it's less than, for instance, the Apple market cap. It's $2.5 trillion. So pretty small still. And I think that's, you know, where lies sort of the attraction. These markets haven't moved in recent years. It's a good diversification from, you know, developed markets. These are small markets. So once sort of institutional investors, and from our experience, for the first time in, I would say, in years, we sort of getting some institutional traction in recent months. So people are starting to look at these markets, and the valuations are very attractive for our portfolio. So our portfolio trades on about 9 times price earnings multiple, with well over 20% earnings growth. backed by sort of 4.5 to 4.7% dividend yields. This is much more attractive than even the overall ASEAN market, which is on about 16 times. But even after the recent correction, sort of US markets, are still well north of 20 times. Maybe I sort of leave it there for a moment.
Sure.
Sam?
I think what's unique about this strategy is firstly the team's experience. 50 years, around 50 years experience between Alex and James of dedicated, on the ground. It's real traditional style fund management. It's bottom up, fundamental value approach, really understanding the companies, the management teams, going to meet the management teams when travel is permissible. And I think this really gives the team their edge, really, which is one of the core drivers of their performance over the years. The ASEAN index, since Alex and James have been managing this strategy, has been relatively flat, as you can see in the chart below. But the guys have delivered 12% annualized return over a period where the market has done very little. But like Alex says, we can't emphasize enough the opportunity set where people talk about markets being, at a high level. We don't want to be invested at the moment because there's a lot of uncertainty. These markets are still cheap. They're under-owned by institutions. The companies which are there are in possibly the most dynamic region in the world. And the long-term, medium to long-term fundamentals of this asset class can easily deliver 15% plus annualized returns, albeit with a little bit of short-term volatility, as the nature of sort of emerging frontier markets are, but it's very attractive. And the other aspect, which Alex didn't touch on, but I'll let him talk about this in a little bit more detail, is the valuation of the currency classes versus the US dollar. This is a US dollar-based fund. We've got Euro share class and Sterling share class, which are both hedged. But some of the currencies in the region are very attractive. Would it be fair to say, Alex?
Oh, absolutely, yeah. Well, just as an example, the Indonesian rupiah over the last decade has lost 45% against the dollar. We are, long-term, we are not predicting what the dollar will do, but we think at some point, the dollar will weaken, and which should benefit these emerging markets. So what has been sort of headwinds in the past decade, I think we lost sort of 10 to 12% on currency losses, could actually sort of help us in the coming years once these markets get sort of more traction, more interest. Just sort of, it's a very diversified region. On one hand, you have a frontier market like Vietnam, which probably can get upgraded to emerging status in the coming years. On the other hand, you have a financial hub as Singapore. What we do a lot is sort of compare, Vietnam, for instance, to places like Thailand, probably 15, 20 years behind. But sort of what worked back then for Thailand, if you would bought insurance companies, property companies, back in those days, you would have done very well. So you sort of look at sort of similarities in these markets that are behind, also Indonesia, sort of behind Thailand. And so we use our sort of experience. We are on the ground experience, but we have also built up, I would say, an extensive network of sort of decision makers, the leading property guys, the investment bankers. And I think that sort of gives us this niche approach. There are other ASEAN funds, but they typically own sort of, the top 10 stocks. They own the Singaporean banks. They own some energy companies in the region, and they pretty much sort of invest in all the same stocks. When we sort of really sort of have found that sort of little niche where not many people look at. And I guess that can create sort of alpha over the coming years. As Sam pointed out, when I started this fund, I would expect it to return 15 to 20%. We're not that far off, but that's been sort of against the backdrop that has been pretty negative for the region. And once sort of people start sort of recognizing sort of the opportunity here, I think we will have potentially a couple of good years ahead. And
I think it's true to say the only real way you can extract alpha, significant performance versus a benchmark within a strategy like this is to really have boots on the ground. You know, the team at Nanjar has been in Asia for a long time. Alex and James, sorry, has been there even longer. In terms of the country allocation, we're very flexible. You know, you may have noticed we've got quite a large exposure to Vietnam. This has been built up since the UCITS fund was launched. We started around 15%, it went up to 60%. But we're just, the team are now currently reviewing Indonesia for some of the reasons Alex mentioned earlier. So you're probably going to see a slight shift in terms of country allocation, but we don't have any restrictions within the mandate for this strategy, where we have to have certain amounts in each different region. It's very much left to the management, Alex and his team, to because they're the experts. You know, we don't want to have any restrictions around them, just to allow the portfolio to reduce the restriction on the portfolio. We just allow it to be freely run. And one other aspect is within the UCITS rules, we can actually hold up to 20% cash in the fund. Typically, we're fairly fully invested, as you can see at the moment on the country exposure chart. However, we have held up to 15, 18% cash in sometimes, but the opportunity set at the moment is just too compelling to be holding cash, because obviously it's a drag on the portfolio. So just to really summarize, you know, the UCITS fund's been going almost 3 years now. We've tripled the index in terms of performance, net of fee.